Now is the time to act if you want to save yourself thousands of dollars. Many employee benefit plans offer substantial tax breaks that you may not even know about. And for this week's Money Watch Early Show financial advisor, Ray Martin, is here with 5 tax moves that you should make immediately. So, Ray, now is the time of year where we get these postcards in the mail often from our employers saying open enrollment.
Right.
What is open enrollment and why is it so important to act?
Okay, open enrollment, Rebecca, is a time where people make their benefit elections now for the following year. The reason it's important to act now and think about this carefully is there are some great tax savings in your benefits plans. Particularly, there are reimbursement and savings accounts where you can set aside money before federal taxes, before state taxes, before Social Security taxes, and use that money completely tax-free to pay for things you're already paying for and save hundreds or thousands of dollars in taxes here to do that. And, you know, if you can get a 40% discount on paying for groceries and pay for your groceries pre-tax, you would do it, wouldn't you?
Get it before Uncle Sam does.
Absolutely. It's what you want to do here. So you listen carefully and we'll tell you about these. The other thing, Rebecca, is only a quarter of the people that are offered these accounts use them because there's some misconception. So that's why we're here today.
A lot of money left on the table. So let's talk about the first one, flexible savings account.
Okay. Flexible savings accounts, there are basically 2 flavors of this. There's a healthcare reimbursement account and dependent care reimbursement account. The healthcare reimbursement account, flexible spending account, is an account where you can set aside money that you know you're going to spend for out-of-pocket co-payments and deductibles for the year. And it may only be a few $100s, but you know, or maybe more, depending on the health insurance plan you choose. You set aside that money and then you use a debit card and use it to pay for things, deductibles, co-payments, prescription medications. The couple of gotchas here that keep people from using this is if I put the money aside and I don't use it, I could lose it. And now they know that over-the-counter medications are not eligible without a prescription. But there's a lot of costs here with deductibles, copays, and prescription meds that you should use. Eyeglasses, dental expenses. It's a great account to use.
Comes in handy.
Absolutely.
The health savings account also is very significant.
Health savings accounts is different from a reimbursement account. And the other kind of reimbursement account, by the way, is for dependent care expenses for folks. And you can save a lot of money there, up to $5,000 you can set aside there. And again, it has a use it or lose it feature. But the health savings account that you mentioned, Rebecca, completely different here in one respect. First, you can set aside money with it, but you have to choose a high deductible health insurance plan, a health insurance option that has a $2,000 or $3,000 deductible. Save a lot of money there because your employer will fully pay for that health insurance option, but you need to set aside the money in the health savings account. Money that you don't use in this for co-payments, deductibles, completely rolls over for the following year. You don't forfeit it. So it's a great option for people to consider, a health savings account with a high deductible health insurance plan.
The commuter account, lastly, for people who are in transit.
You live in Washington, D.C., Boston, New York. You know what parking tolls and commuter costs are. You can set aside $230 a month and pay for commuter expenses completely tax-free. Why wouldn't you use it to get tax-free costs, on your commuter costs here and save, again, about 30 or 40% on these costs? So you can save a lot of money here.
And the 401k, we say opt-in. Make sure you take advantage of your employer's free money.
Absolutely. Save at least up to the match of 6%, but sign up for automatic rebalancing and automatic contribution increases here, or even a managed account in your 401k to keep it on autopilot for you too when you're not watching it and working hard. It's a great way to maximize that as well.
Ray Martin, thank you for maximizing our assets for us.
You're welcome.
We appreciate it.